move on to market action. It's a holiday on Dalal Street with traders getting an off due to Mahashivratri. However, the Asian indices, they are up and running and they are posting some good gains. Shanghai seeing gains of around 1.12 odd%. Hang Seng also higher by 0.6%. Nikkei also very healthy gains of around 1 odd%. And this is because they are incremental hopes that this US-China trade talks will go ahead. We'll also bring up Kospi, Taiwan and the Straits Times for you. While an hour back, the Straits Times and Kospi, they were not doing so well. So it was a mixed picture. So Kospi right now also down with 0.2% of cuts. Taiwan also seeing some cuts. But Straits, that has actually accentuated those gains, is up around 0.9%. So overall, the picture for Asian markets is looking good as of now. But let's move on. Back home, in a significant move for India Inc., market regulator Sebi has tightened the rules for corporate debt restructuring. No company can now be exempt from open offer rules while making an acquisition. An exception will be made only in the case of lenders taking over a company. The Sebi board also took a slew of other decisions, and Yash Jain is here with the details. Yash, let's start with the open offer rules getting tightened. Explain what Sebi has done and why this move is so significant.
In a lot of clarifications and important amendments coming through in SEBI's board meeting, and the most crucial, as you rightly mentioned, would be on the corporate debt restructuring part. To start with, SEBI has very importantly clarified that an exemption from the preferential issue pricing, which comes under SEBI ICDR regulations, as well as exemption under takeover regulations, which gives the open offer exemption, will only be granted to financial institutions as well as banks and not to any other party or individual or entity as far as involvement in CDR is concerned. So what that means is only when a financial institution or a bank carries out a corporate debt restructuring where it converts the debt into equity and the stake goes beyond 51% in an entity, only that bank and financial institution will get an exemption under the preferential issue pricing as well as open offer exemption, and no other individual or party. Of course, another important point would be that open offer exemption will only be granted if the takeover transaction which is being done is being directed by a court or a tribunal and not by any other competent authority, which essentially means that only when a court or a tribunal directs a takeover transaction is when open offer exemption will be granted, and no other competent authority. The interpretation of competent authority could be sectoral regulators or government for that matter. And just so that this particular point is very clear, I would put an example to this. In a transaction like LIC IDBI Bank, where LIC raised its stake beyond 51% in IDBI Bank, no open offer exemption would be granted because that wasn't a court or a tribunal directed takeover transaction, but it was a government directed takeover transaction. So no open offer exemption there. This was a very important part of SEBI's board meeting on the corporate debt restructuring part. But apart from that, of course, regulations relaxed as far as REITs and InvITs are concerned. There have been modalities which have been decided which make them more attractive as an instrument. SEBI's also approved the participation from mutual funds as well as portfolio managers when it comes to commodity derivatives. So another important development to increase the depth in the commodity derivative market.
Thanks a lot for that, Yash. And let's move on. If you are a salaried employee, here's a Supreme Court ruling that may impact your enhanced salary but leave you a higher retirement corpus. The Apex Court has ruled that employers cannot exclude special allowances from basic pay while calculating their contribution to Provident Fund. Prashant Nair has all the details.
This is a pretty landmark judgment from the Supreme Court, which has the potential to impact, many people around the country, especially in certain industries like manufacturing, etc. And I'll explain why. The judgment per se is essentially looks at the aspect of what is the pay which should be taken, what is the basic salary which should be taken, on which the Provident Fund contribution should be calculated on. That's essentially what the question before the Supreme Court was. Now, this is what the Supreme Court is actually saying. Supreme Court is saying that special allowance is part of basic pay. They're saying that allowances in question, essentially part of the basic wage, were camouflaged by employers, by companies to avoid deduction and PF contribution. appeals by establishments, which is corporations who were sort of arguing against this in the court, therefore merit no interference. Appeal preferred by the Regional Provident Fund Commissioner deserves to be allowed. This was EPFO, which had gone to court a couple of years ago. I mean, this is not a new matter. It has been in the court for the last many years. And now the Supreme Court is coming out and saying, well, for the purpose of calculating what should be the total basic salary on which both the employer contribution and employee contribution should be calculated on, needs to be the total legitimate basic pay, which includes basic salary plus special allowance. Let's just rewind a little bit and tell you what used to happen. I mean, the law essentially says that if the basic salary is up to 15,000 rupees, then PF has to be calculated at 12%. I mean, the employer contributes 12%, the employee, 12% of is also contributed by the employee. But in reality, I mean, what used to happen is that for example, if somebody's pay is 15,000 rupees, lots of companies used to split that 15,000 rupees into, some which was classified as basic salary and other as special allowance. I mean, so you could you could split 15 into 9 and 6, 9 basic and 6 as special allowance. What that allowed companies to do is basically pay or contribute only 12% on 9,000 rupees, which was classified as basic income, basic salary. What the Supreme Court is now saying is that, well, you can't do that. You have the definition of basic pay includes all emoluments, including special allowance. So so 9,000 basic salary looking at the previous example, you have to add that 6,000 rupees to it, and then you have to calculate the contribution of the employer 12% as a percentage of 15,000. Prima facie, this will impact anybody whose salary is within that 15,000 odd rupee mark. All domestic workers, basically, whose salary is up to 15,000 rupees. If your pay is over 15,000, contribution is anyway voluntary. I mean, you may actually choose to contribute at 15,000, or you can actually take the full salary. If it is higher than 15, so be it, and choose to contribute at the rate of 12%.
Thanks a lot for that, Prashant. With that, we wrap this edition of News Now. Thank you for watching the show and stay tuned to CNBC TV 18.